Question 1. Market research demonstrates that insurers are increasingly adopting AI for underwriting. In this context, when an AI-powered underwriting system incorrectly assesses a risk, leading to a policy being declined unfairly, which of the following best reflects the principle of accountability and responsibility within the regulatory framework for AI in insurance? Option A. Accountability for the underwriting decision rests solely with the AI algorithm itself, as it is the entity that processed the data and made the final determination. Option B. The insurer focuses exclusively on the AI's technical accuracy metrics, such as its predictive power, and considers the underwriting decision resolved if the AI meets its predefined performance benchmarks. Option C. The insurer delegates all underwriting decisions to the AI system without any human intervention, assuming the AI's programming guarantees optimal and fair outcomes. Option D. The insurer establishes a clear governance framework that defines human oversight for AI-driven underwriting decisions, assigns responsibility for the AI's performance to specific internal teams, and implements a process for customer appeals and error correction. Correct answer is D. The insurer establishes a clear governance framework that defines human oversight for AI-driven underwriting decisions, assigns responsibility for the AI's performance to specific internal teams, and implements a process for customer appeals and error correction. Explanation. This scenario presents a professional challenge because the rapid integration of AI in insurance underwriting, while promising efficiency gains, introduces complex accountability gaps. Determining who is ultimately responsible when an AI system makes a flawed underwriting decision that results in financial loss or unfair treatment of a customer is a critical issue. This requires careful judgment to balance innovation with regulatory compliance and ethical considerations, ensuring that the benefits of AI do not come at the expense of consumer protection and market integrity. The correct approach involves establishing a clear governance framework that defines roles and responsibilities for AI development, deployment, and oversight. This framework should include mechanisms for human review of AI-driven decisions, particularly in high-stakes situations, and a robust process for identifying, reporting, and rectifying errors. This approach is best professional practice because it aligns with the principles of accountability and transparency expected by regulatory bodies. Specifically, under the AI for Insurance Certificates presumed jurisdiction, which we will assume aligns with general principles of good governance and consumer protection, often found in mature regulatory environments like the UK's FCA or similar. Insurers have a duty of care to their customers. This duty extends to ensuring that the tools they use, including AI, do not lead to unfair outcomes or breaches of regulatory requirements. Establishing clear lines of accountability ensures that the insurer, as the entity deploying the AI, remains ultimately responsible for its actions and outcomes, thereby upholding consumer trust and regulatory expectations. An incorrect approach that relies solely on the AI's internal logic for accountability fails because it abdicates the insurer's fundamental responsibility. Regulators expect insurers to understand and manage the risks associated with their operations, including those introduced by AI. Attributing accountability solely to the algorithm is a misinterpretation of the insurer's role and a failure to implement adequate oversight. Another incorrect approach that involves delegating all decision-making to the AI without any human oversight or validation is also professionally unacceptable. This bypasses essential risk management processes and can lead to systemic errors or biases going undetected. It fails to meet the duty of care owed to customers and ignores the inherent limitations of AI, which may not fully grasp nuanced individual circumstances or evolving market conditions. A third incorrect approach that focuses only on the technical performance metrics of the AI, such as accuracy rates, without considering the broader ethical implications or the impact on customer fairness, is insufficient. While performance is important, it does not address the core issue of accountability when those performance metrics are achieved at the expense of regulatory compliance or ethical standards. The professional decision-making process for similar situations should involve a proactive risk assessment of AI integration, the development of clear policies and procedures for AI governance, the implementation of robust testing and validation protocols, and the establishment of a continuous monitoring and review process. This includes defining who is accountable for the AI's outputs ensuring that human judgment can override AI decisions when necessary, and having a clear escalation path for addressing issues. This systematic approach ensures that AI is used responsibly and ethically, maintaining the insurer's commitment to its customers and regulatory obligations. Question 2. Compliance review shows that an insurance company is using a gradient boosting model for underwriting, which has demonstrated superior predictive accuracy compared to previous models. However, the model's internal workings are highly complex, making it difficult to provide clear, individualized explanations for underwriting decisions to customers or regulators. Which of the following approaches best balances the benefits of advanced AI with regulatory and ethical obligations? Option A. Utilize feature importance metrics derived from a random forest model as a proxy explanation for the gradient boosting model's underwriting decisions. Option B. Replace the gradient boosting model with a simpler, inherently interpretable model, even if it significantly reduces underwriting accuracy and potentially leads to less competitive pricing. Option C. Implement robust post-hoc explanation techniques, such as SHAP or LIME, to interpret the gradient boosting model's decisions, alongside clear communication protocols for explaining these insights to customers and regulators. Option D. Continue using the gradient boosting model without further explanation measures, relying solely on its high predictive accuracy as justification for its use. Correct answer is C. Implement robust post-hoc explanation techniques, such as SHAP or LIME, to interpret the gradient boosting model's decisions, alongside clear communication protocols for explaining these insights to customers and regulators. Explanation. This scenario presents a professional challenge because it requires balancing the pursuit of enhanced predictive accuracy, a key benefit of ensemble methods like random forests and gradient boosting, with the fundamental regulatory obligation of transparency and explainability in insurance underwriting. Insurers are not only expected to use models that are effective, but also to understand and be able to justify the basis of their decisions, particularly when those decisions impact consumers. The complexity inherent in ensemble methods, especially gradient boosting, can obscure the direct causal links between specific customer attributes and underwriting outcomes, creating a potential conflict with regulatory expectations for clear and understandable decision-making processes. The correct approach involves prioritizing the use of ensemble methods that offer a more interpretable output, or implementing robust post-hoc explanation techniques that can adequately articulate the model's reasoning. For instance, a random forest, while an ensemble, can provide feature importance scores that offer a degree of insight into which variables are most influential. If gradient boosting is chosen for its superior predictive power, it is imperative to pair it with methods like SHAP, happily additive explanations, or LIME, local interpretable model-agnostic explanations, to generate explanations for individual underwriting decisions. This approach aligns with regulatory frameworks that often require insurers to be able to explain adverse decisions to customers and to demonstrate that their underwriting practices are fair and non-discriminatory. The ethical imperative is to ensure that, while leveraging advanced AI, the insurer does not inadvertently create a black box that prevents accountability or fair treatment of policyholders. An incorrect approach would be to deploy a complex gradient boosting model without any accompanying interpretability measures, solely based on its reported accuracy gains. This fails to address the regulatory requirement for explainability and could lead to situations where the insurer cannot justify why a particular applicant was denied coverage or offered a higher premium. This lack of transparency is a significant ethical and regulatory failure, potentially violating principles of fairness and consumer protection. Another incorrect approach would be to revert to simpler, less accurate models that are inherently interpretable, but at the cost of significantly reduced underwriting effectiveness. While interpretability is crucial, completely sacrificing predictive power might lead to suboptimal pricing and risk selection, which could also be seen as a failure to act prudently in the insurer's and policyholders' best interests. The ethical consideration here is finding the right balance. A third incorrect approach would be to claim that feature importance from a random forest is sufficient explanation for a gradient boosting model. While random forests offer feature importance, this metric does not fully capture the complex, nonlinear interactions and sequential learning that characterize gradient boosting. Relying on an explanation technique that is not fully representative of the model's actual decision-making process is misleading and ethically questionable. The professional decision-making process should involve a thorough risk assessment of the chosen AI method, considering both its predictive capabilities and its explainability. This includes understanding the specific regulatory requirements for model transparency and consumer communication. When advanced, less interpretable models are considered, a proactive strategy for generating and validating explanations must be developed and implemented. This involves a continuous dialogue between data science, compliance, and legal teams to ensure that the deployment of AI in insurance underwriting is both effective and compliant. Question 3. Regulatory review indicates that an insurance company is developing a linear regression model to predict claim frequency. The model includes variables such as geographical location, age, and vehicle type. While protected characteristics like race or religion were not directly included, the data science team has flagged that postcode might be highly correlated with certain demographic groups. What is the most appropriate regulatory and ethically sound approach for the insurer to take regarding the postcode variable in their linear regression model? Option A. Proceed with the model as is, assuming that since protected characteristics were not directly included, the model is compliant with anti-discrimination regulations. Option B. Immediately remove the postcode variable from the model to avoid any potential for indirect discrimination, even if it reduces the model's predictive accuracy. Option C. Conduct a thorough analysis to determine if postcode acts as a proxy for protected characteristics, and if so, assess its causal link to claim frequency. If it is a proxy without a clear causal link to risk, explore alternative variables or mitigation strategies. Option D. Rely solely on the statistical significance of the postcode variable's coefficient in the linear regression to determine its appropriateness, and if it is statistically significant, retain it. The correct answer is C. Conduct a thorough analysis to determine if postcode acts as a proxy for protected characteristics, and if so, assess its causal link to claim frequency. If it is a proxy without a clear causal link to risk, explore alternative variables or mitigation strategies. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent tension between leveraging advanced AI techniques like linear regression for predictive modeling in insurance and the stringent regulatory requirements for fairness, transparency, and non-discrimination. Insurers must demonstrate that their models do not perpetuate or introduce bias, particularly when using protected characteristics, even indirectly. The challenge lies in balancing predictive accuracy with ethical and legal obligations, ensuring that the insights derived from AI are used responsibly and do not lead to unfair outcomes for policyholders. Careful judgment is required to navigate the complex interplay of data science, business objectives, and regulatory compliance. Correct approach analysis. The correct approach involves a thorough investigation into the potential for proxy variables within the linear regression model to inadvertently discriminate against protected groups. This requires a deep understanding of the data and the model's coefficients, specifically examining if seemingly neutral variables are highly correlated with protected characteristics, e.g., postcode with ethnicity or socioeconomic status. If such correlations are identified, the insurer must then assess the causal link between these proxy variables and the predicted outcome. If the link is not demonstrably causal and the variable is found to be a proxy for a protected characteristic, it should be excluded or adjusted. An alternative, non-discriminatory variables should be explored to maintain predictive power. This approach aligns with the principles of fair insurance practices and regulatory mandates that prohibit unfair discrimination, ensuring that the AI model is not used as a tool for indirect discrimination. The focus is on understanding the model's behavior and its potential impact on different demographic groups, a core tenet of responsible AI deployment in regulated industries. Incorrect approaches analysis. One incorrect approach is to proceed with the linear regression model without any further investigation, assuming that because protected characteristics were not directly included as input variables, the model is inherently compliant. This fails to acknowledge the sophisticated ways in which bias can be introduced through proxy variables. Regulatory frameworks are designed to prevent indirect discrimination, and this approach would likely violate such provisions by overlooking potential discriminatory impacts. Another incorrect approach is to immediately remove any variable that shows even a slight correlation with a protected characteristic, regardless of its predictive power or causal relationship to the insurance risk. This overly cautious stance can lead to a less accurate model, potentially increasing premiums for all policyholders or failing to accurately assess risk, which can also be considered unfair. It also demonstrates a lack of nuanced understanding of how to mitigate bias while maintaining model efficacy. A third incorrect approach is to rely solely on the statistical significance of coefficients in the linear regression model as an indicator of fairness. While statistical significance is important for model interpretation, it does not inherently guarantee that the model is free from discriminatory effects, especially when dealing with complex interactions and proxy variables. Regulatory compliance requires a more holistic assessment of fairness beyond mere statistical significance. Professional reasoning. Professionals in this field must adopt a proactive and investigative stance when deploying AI for predictive modeling. The decision-making process should involve 1. Initial model development and validation. 2. A rigorous assessment of potential bias, specifically looking for proxy variables that might indirectly discriminate against protected groups, using techniques that go beyond simple correlation. 3. If potential proxies are identified, a causal analysis to determine if they are truly predictive of risk or merely correlated with protected characteristics. 4. If a variable is identified as a discriminatory proxy, explore alternative, non-discriminatory variables or employ bias mitigation techniques. 5. Continuous monitoring of model performance and outcomes to detect any emergent biases over time. This systematic approach ensures that AI is used ethically and in compliance with regulatory requirements, fostering trust and fairness in the insurance sector. Question 4. The efficiency study reveals that implementing AI-powered sentiment analysis on customer feedback can significantly reduce processing time. Which approach best balances this efficiency gain with regulatory and ethical considerations for an insurance company operating under UK regulations and SISI guidelines? Option A. Integrate the AI sentiment analysis tool with a robust human oversight process, including regular audits for bias and accuracy, and clear guidelines for handling complex or ambiguous feedback. Option B. Utilize the AI sentiment analysis tool to automatically generate customer satisfaction scores for targeted marketing campaigns, without validating the AI's accuracy or considering data privacy implications. Option C. Implement the AI sentiment analysis tool to identify negative feedback for immediate escalation, without further contextual analysis or human validation. Option D. Deploy the AI sentiment analysis tool to automatically categorize all customer feedback, with no human review, to maximize speed and cost savings. The correct answer is D. Deploy the AI sentiment analysis tool to automatically categorize all customer feedback, with no human review, to maximize speed and cost savings. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent tension between leveraging AI for efficiency in customer feedback analysis and the regulatory imperative to ensure fairness, transparency, and data protection. The use of sentiment analysis, while powerful, can inadvertently introduce biases or lead to misinterpretations that could negatively impact customer interactions or product development if not handled with extreme care. The professional must navigate the desire for speed and cost reduction against the ethical and legal obligations to treat customer feedback accurately and responsibly. Correct approach analysis. The correct approach involves a multifaceted strategy that prioritizes accuracy, fairness, and regulatory compliance. This includes establishing clear guidelines for the AI's operation, ensuring human oversight for complex or sensitive feedback, and regularly auditing the AI's performance for bias and accuracy. This approach is right because it directly addresses the core principles of responsible AI deployment within the insurance sector. Specifically, it aligns with the principles of data governance and consumer protection, which are paramount in regulated industries. By incorporating human review, it mitigates the risk of AI errors leading to unfair outcomes, a key concern under consumer protection laws. Regular auditing ensures ongoing compliance and identifies potential issues before they escalate, demonstrating a commitment to ethical AI use and adherence to regulatory expectations for AI deployment in financial services. Incorrect approaches analysis. Implementing sentiment analysis without establishing clear human oversight mechanisms is professionally unacceptable. This approach risks misinterpreting nuanced customer feedback, potentially leading to flawed business decisions or unfair treatment of customers. It fails to meet the ethical standard of ensuring accuracy and fairness in AI-driven processes, and could violate consumer protection regulations that mandate clear and understandable communication and fair dealing. Deploying sentiment analysis solely to identify negative feedback for immediate escalation, without considering the context or potential for misinterpretation, is also professionally unsound. This can lead to a reactive and potentially biased approach to customer service, where the AI's output dictates actions without sufficient critical evaluation. This overlooks the need for a balanced understanding of feedback and could result in disproportionate responses, potentially contravening principles of fair treatment and data integrity. Using sentiment analysis to automatically categorize customers based on their feedback for targeted marketing, without validating the AI's accuracy or considering data privacy implications, is ethically and regulatorily problematic. This approach risks creating discriminatory marketing practices if the AI is biased, and may violate data protection laws by using customer feedback for purposes beyond its original intent without explicit consent or clear justification. It prioritizes commercial gain over customer trust and regulatory compliance. Professional reasoning. Professionals should adopt a risk-based approach, starting with a thorough understanding of the specific regulatory requirements governing AI and insurance within their jurisdiction. This involves identifying potential biases in the training data, establishing clear validation metrics for the AI's performance, and defining the role of human judgment in the feedback analysis process. A robust governance framework should be in place, outlining responsibilities for AI deployment, monitoring, and remediation. Regular training for staff involved in overseeing AI outputs is crucial to ensure they can critically evaluate the AI's findings and make informed decisions. The decision-making process should always prioritize customer well-being, regulatory adherence, and the ethical use of technology. Question 5. Strategic planning requires a thorough assessment of the potential benefits and risks associated with implementing natural language processing, NLP, for underwriting document analysis. Considering the UK regulatory framework for insurance, which of the following approaches best balances the drive for efficiency with the imperative for regulatory compliance and customer fairness when introducing an NLP-powered underwriting tool? Option A. Prioritize the speed of document processing above all else, ensuring the NLP tool can handle the highest volume of documents with minimal focus on validation or human oversight. Option B. Immediately deploy the NLP solution across all underwriting processes to maximize efficiency gains, with a plan to address any identified issues retrospectively. Option C. Automate all underwriting decisions using the NLP tool, assuming that the technology is inherently accurate and compliant with all regulatory requirements. Option D. Conduct a pilot program on a diverse subset of underwriting documents, followed by iterative refinement and continuous monitoring of the NLP model's accuracy and fairness, incorporating human underwriter review for complex cases. The correct answer is B. Immediately deploy the NLP solution across all underwriting processes to maximize efficiency gains, with a plan to address any identified issues retrospectively. Explanation. Scenario analysis. This scenario presents a common implementation challenge when integrating AI, specifically natural language processing, NLP, into underwriting document analysis. The core difficulty lies in balancing the efficiency gains offered by AI with the stringent regulatory requirements for accuracy, fairness, and data privacy in insurance. Underwriters must ensure that the AI system not only extracts information correctly, but also does so without introducing bias or compromising sensitive customer data, all while adhering to the specific regulatory framework governing insurance operations in the UK. The professional challenge is to deploy a technically sound solution that is also compliant and ethically responsible. Correct approach analysis. The correct approach involves a phased, iterative deployment with robust validation and human oversight. This begins with a pilot program on a representative subset of documents to assess accuracy and identify potential biases. Crucially, it mandates continuous monitoring of the NLP model's performance against established underwriting guidelines and regulatory standards. A key component is the establishment of a clear escalation path for complex or ambiguous cases to human underwriters, ensuring that AI augments rather than replaces expert judgment. This approach aligns with the Financial Conduct Authority's (FCA) principles of treating customers fairly and ensuring that firms act in their customers' best interests. The emphasis on validation and human oversight directly addresses the regulatory expectation for accurate risk assessment and the prevention of discriminatory outcomes, as outlined in the Equality Act 2010, which prohibits discrimination. Iterative nature allows for adjustments to mitigate risks before full-scale implementation, thereby upholding the duty of care expected of insurance providers. Incorrect approaches analysis. Implementing the NLP solution without a pilot program and extensive validation is a significant regulatory failure. This bypasses the opportunity to identify and rectify inaccuracies or biases in the AI's analysis before it impacts real underwriting decisions. Such an approach risks generating incorrect risk assessments, potentially leading to unfair pricing or denial of coverage, which contravenes the FCA's principles of fairness and good conduct. Deploying the NLP solution with the intention of completely automating underwriting decisions without any human review mechanism is also professionally unacceptable. This disregards the inherent complexity of insurance underwriting, which often requires nuanced judgment that current AI may not fully replicate. It creates a high risk of systemic errors and biases going undetected, leading to widespread unfair treatment of customers and potential breaches of regulatory requirements related to accurate risk assessment and fair customer outcomes. Focusing solely on the speed of document processing without establishing clear metrics for accuracy, fairness, and compliance with underwriting guidelines is another flawed approach. While efficiency is a benefit of AI, it cannot come at the expense of regulatory adherence and customer protection. This narrow focus neglects the fundamental duty to ensure that underwriting decisions are sound, equitable, and compliant, potentially leading to regulatory sanctions and reputational damage. Professional reasoning. Professionals should adopt a risk-based, phased approach to AI implementation. This involves 1. Thoroughly understanding the specific regulatory requirements and ethical considerations relevant to AI in insurance within the UK jurisdiction. 2. Conducting comprehensive testing and validation of the AI model on diverse datasets, simulating real-world scenarios. 3. Implementing a system of continuous monitoring and performance evaluation with clear thresholds for intervention. 4. Ensuring that human oversight and review processes are integrated, particularly for complex or high-stakes decisions. 5. Establishing clear governance frameworks for AI, including accountability for model performance and outcomes. 6. Prioritizing transparency in how AI is used and its limitations. Question 6. The audit findings indicate that an insurer's new natural language processing (NLP) system, designed to automate the initial assessment of motor insurance claims by analyzing claimant statements, has been implemented with a policy that allows for automated claim settlement if the NLP output falls within a predefined confidence threshold. What is the most appropriate approach to address this finding? Ensuring compliance with regulatory expectations for fair treatment of customers and responsible AI deployment. Option A. Increase the confidence threshold for automated settlement, assuming this will inherently improve the accuracy and fairness of the NLP system's decisions. Option B. Implement a mandatory human review process for all claims, regardless of the NLP system's confidence threshold, with the NLP output serving as a supplementary tool for the human assessor. Option C. Rely on the existing confidence threshold for automated settlement, but enhance the training data for the NLP model with more diverse claimant statements to mitigate potential biases. Option D. Conduct a retrospective analysis of all claims settled automatically by the NLP system to identify any potential discrepancies or biases, and then adjust the confidence threshold based on these findings. The correct answer is B. Implement a mandatory human review process for all claims, regardless of the NLP system's confidence threshold, with the NLP output serving as a supplementary tool for the human assessor. Explanation. The audit findings indicate a potential over-reliance on natural language processing (NLP) models for claims assessment without adequate human oversight, raising concerns about fairness and accuracy. This scenario is professionally challenging because it requires balancing the efficiency gains of AI with the fundamental duty of care owed to policyholders. The potential for algorithmic bias, misinterpretation of complex claim narratives, and the erosion of human judgment in critical decision-making processes necessitates a robust governance framework. The correct approach involves establishing a multi-layered review process where NLP outputs are treated as a preliminary assessment tool, subject to mandatory human review for all claims, especially those flagged as complex or high value. This ensures that the nuances of individual circumstances are considered, mitigating the risk of unfair outcomes due to algorithmic limitations. This approach aligns with regulatory expectations for fair treatment of customers and the responsible deployment of AI in financial services, emphasizing that AI should augment, not replace, human expertise in sensitive areas like insurance claims. The principle of human in the loop is paramount, ensuring accountability and the ability to override automated decisions when necessary. An incorrect approach would be to solely rely on the NLP model's output for claims settlement, assuming its accuracy is sufficient for all cases. This fails to acknowledge the inherent limitations of current NLP technology, such as its susceptibility to bias present in training data and its potential to misinterpret context or sentiment in complex human language. This approach risks violating regulatory principles of fairness and may lead to discriminatory outcomes, as the model might systematically disadvantage certain groups of policyholders. Another incorrect approach would be to implement human review only for small, randomly selected sample of claims, or for those explicitly flagged by the NLP model as requiring further attention. While this might offer some level of oversight, it significantly increases the risk of undetected errors or biases in the majority of claims. This approach falls short of the proactive measures required to ensure consistent fairness and accuracy across the entire claims portfolio, potentially leading to systemic issues that could harm policyholders and damage the insurer's reputation. The professional decision-making process for such situations should involve a risk-based assessment of AI deployment. This includes understanding the capabilities and limitations of the specific NLP model, identifying potential areas of bias, and defining clear thresholds for human intervention. A robust governance framework should mandate regular audits of AI performance, establish clear lines of accountability for AI-driven decisions, and ensure that the technology is used in a manner that upholds ethical principles and regulatory compliance, prioritizing the fair and accurate assessment of all claims. Question 7. Research into the implementation of an AI-powered fraud detection system for a general insurance provider reveals several potential approaches. The insurer is keen to leverage AI to improve the accuracy and speed of identifying fraudulent claims. Which of the following approaches best balances the benefits of AI with regulatory and ethical considerations for AI in insurance? Option A. Utilizing an AI model that has demonstrated high accuracy in detecting fraud, but is considered a black box, meaning its decision-making process cannot be easily understood or explained, and relying on its automated flagging for immediate claim adjustments. Option B. Adopting an AI solution that prioritizes detecting fraud based on historical patterns, even if the data used to train the model contains known biases against certain customer segments, with the aim of maximizing fraud recovery. Option C. Implementing an AI system that provides a fraud score for each claim, with a clear explanation of the factors contributing to that score, and requiring a mandatory review by a human fraud investigator for any claim exceeding a predefined fraud score threshold before any action is taken. Option D. Deploying a sophisticated deep learning model that automatically flags suspicious claims for denial without any human intervention, prioritizing speed and volume of fraud detection. The correct answer is D. Deploying a sophisticated deep learning model that automatically flags suspicious claims for denial without any human intervention, prioritizing speed and volume of fraud detection. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent tension between leveraging advanced AI for fraud detection and the regulatory imperative to ensure fairness, transparency, and accountability in insurance practices. Insurers must balance the efficiency gains of AI with the risk of introducing bias or making decisions that are not explainable to customers or regulators. The complexity arises from the black box nature of some AI models, making it difficult to ascertain the precise reasoning behind a fraud alert, which directly impacts customer trust and regulatory compliance. Correct approach analysis. The correct approach involves implementing an AI-driven fraud detection system that prioritizes explainability and human oversight. This means utilizing AI models that can provide clear justifications for their fraud alerts, even if these justifications are at a high level. Crucially, it mandates that all AI-generated fraud alerts are reviewed by experienced human investigators before any adverse action is taken against a policyholder. This approach aligns with the principles of responsible AI deployment, ensuring that decisions are not solely automated and that there is a mechanism for correcting potential errors or biases. From a regulatory perspective, this upholds the duty of care owed to policyholders and ensures compliance with principles of fairness and due process, which are fundamental in insurance regulation. The ability to explain the rationale behind a fraud flag to a customer or regulator is paramount. Incorrect approach is analysis. An approach that relies solely on a highly complex, opaque AI model for automated fraud flagging without human review fails to meet regulatory expectations for transparency and accountability. Such a system risks making erroneous decisions based on biased data or flawed algorithms, leading to unfair treatment of policyholders. This lack of explainability would likely violate principles of good governance and customer protection, potentially leading to regulatory sanctions. Another incorrect approach would be to deploy an AI system that flags potential fraud, but does not have a robust process for validating these flags. This could lead to a high rate of false positives, causing unnecessary inconvenience and suspicion for legitimate policyholders, thereby damaging the insurer's reputation and potentially contravening consumer protection laws. A third incorrect approach would be to use an AI model that is known to exhibit bias against certain demographic groups, even if it is effective at detecting fraud. This would be a direct violation of anti-discrimination laws and ethical principles, leading to severe legal and reputational consequences. Professional reasoning. Professionals must adopt a risk-based approach to AI implementation in fraud detection. This involves understanding the capabilities and limitations of AI technologies, assessing potential regulatory and ethical risks, and designing systems that incorporate robust governance frameworks. Key considerations include data quality and bias mitigation, model explainability, human oversight, and continuous monitoring and validation of AI performance. The decision-making process should prioritize customer fairness and regulatory compliance, ensuring that AI serves as a tool to enhance, not undermine, these core principles. Question 8. To address the challenge of optimizing risk pooling and risk transfer mechanisms through artificial intelligence, an insurance company is considering several approaches. Which approach best aligns with the regulatory framework for AI in insurance, focusing on process optimization while upholding core insurance principles? Option A. Deploying AI-driven underwriting and claims processing systems that automate decision-making with minimal human oversight, prioritizing speed and cost reduction above all else. Option B. Developing AI algorithms designed to identify and exclude individuals with a higher propensity for claims from standard risk pools, thereby creating more favorable risk pools for a select group of policyholders. Option C. Utilizing AI to analyze vast datasets for more accurate risk factor identification and predictive modeling, enabling precise premium calculations and improved risk segmentation, while ensuring model explainability, fairness, and adherence to anti-discrimination laws. Option D. Implementing AI to dynamically adjust premiums based on real-time behavioral data, with a focus on identifying and segmenting individuals into highly specific risk tiers for personalized pricing, ensuring all data used is anonymized and aggregated. The correct answer is D. Implementing AI to dynamically adjust premiums based on real-time behavioral data, with a focus on identifying and segmenting individuals into highly specific risk tiers for personalized pricing, ensuring all data used is anonymized and aggregated. Explanation. This scenario is professionally challenging because it requires balancing the efficiency gains of AI and risk pooling with the fundamental principles of insurance and regulatory compliance. The core tension lies in ensuring that AI-driven risk segmentation and pricing do not lead to unfair discrimination or undermine the concept of mutual risk sharing, which is central to the insurance model. Careful judgment is required to ensure that AI is used to optimize processes without compromising fairness, transparency, and the solvency of the insurer, all while adhering to the specific regulatory framework governing AI in insurance. Correct approach involves leveraging AI to enhance the accuracy of risk assessment and pricing within established regulatory boundaries. This means using AI to identify granular risk factors that were previously unobservable or difficult to quantify, thereby allowing for more precise premium calculations. Crucially, this must be done in a way that is transparent, auditable, and does not result in prohibited discrimination based on protected characteristics. The regulatory framework for AI in insurance typically mandates that AI models must be explainable, fair, and robust, ensuring that the resulting risk pools remain viable and that policyholders are treated equitably. This approach aligns with the principle of sound financial management and consumer protection, ensuring that AI serves to improve the efficiency and fairness of risk transfer mechanisms rather than to exploit or disadvantage individuals. An incorrect approach that relies solely on AI for automated, opaque risk segmentation without human oversight or regulatory validation fails to uphold the principles of fairness and transparency. This can lead to AI models that inadvertently discriminate against certain groups, even if not explicitly programmed to do so, by relying on proxy variables that correlate with protected characteristics. Such an approach would likely violate regulations requiring explainability and prohibit unfair discrimination, potentially leading to regulatory sanctions and reputational damage. Another incorrect approach that prioritizes cost reduction through AI-driven automation of underwriting and claims processing without adequate consideration for the accuracy and fairness of the AI's decisions poses significant risks. If the AI is not sufficiently trained or validated, it could lead to incorrect risk assessments, unfair pricing, or improper claims handling, undermining the insurer's financial stability and its duty to policyholders. This approach neglects the critical need for AI to augment, rather than blindly replace, human judgment in areas where ethical and regulatory considerations are paramount. A further incorrect approach that focuses on maximizing profit by using AI to identify and exclude high-risk individuals from risk pools, thereby creating artificially low-risk pools for preferred customers, would fundamentally distort the concept of risk pooling. This could lead to adverse selection, where only those with the highest risk remain in the general pool, making insurance unaffordable or unavailable for many. Such a strategy would likely contravene regulatory objectives aimed at ensuring broad access to insurance and maintaining the integrity of risk-sharing mechanisms. The professional decision-making process for similar situations should involve a multifaceted evaluation. Firstly, understand the specific regulatory requirements for AI in insurance within the relevant jurisdiction. Secondly, assess the AI's capabilities and limitations in relation to risk pooling and transfer mechanisms, focusing on its ability to enhance accuracy without introducing bias or opacity. Thirdly, consider the ethical implications of the AI's application, particularly concerning fairness, transparency, and consumer protection. Finally, implement robust governance frameworks, including ongoing monitoring, auditing, and human oversight, to ensure that AI is used responsibly and in compliance with all applicable laws and guidelines. Question 9. Analysis of the implementation of natural language processing, NLP, for automated analysis of insurance claims documents in the UK market, which approach best aligns with the regulatory framework and ethical considerations for AI in insurance. Option A. Implementing a third-party NLP solution and relying solely on its vendor-provided performance metrics for accuracy and bias, with no independent validation, to expedite claims processing. Option B. Employing an NLP model to make final, automated decisions on all claims without any human review, assuming the algorithm's inherent objectivity will ensure fair outcomes. Option C. Utilizing an NLP model that prioritizes the speed of document analysis above all else, with minimal focus on the nuanced interpretation of claim details or potential for bias, to achieve maximum operational efficiency. Option D. Developing and deploying a custom NLP model that undergoes rigorous, independent validation for accuracy, fairness, and bias detection, with clear protocols for human oversight and intervention in the claim's decision-making process. The correct answer is A. Implementing a third-party NLP solution and relying solely on its vendor-provided performance metrics for accuracy and bias, with no independent validation, to expedite claims processing. Explanation. This scenario is professionally challenging because it requires balancing the efficiency gains of AI-driven claims document analysis with the imperative to maintain regulatory compliance and ethical data handling practices within the UK's insurance framework. The core challenge lies in ensuring that the natural language processing (NLP) models used for claims document analysis are not only accurate but also transparent, fair, and do not inadvertently introduce bias or compromise customer data privacy, all while adhering to the principles set out by the Financial Conduct Authority (FCA) and relevant data protection laws like the UK GDPR. The correct approach involves a comprehensive validation and ongoing monitoring process for the NLP models. This includes rigorous testing for accuracy, bias detection, and ensuring that the model's outputs are explainable to a degree that allows for human oversight and intervention. Regulatory justification stems from the FCA's principles of treating customers fairly and ensuring robust governance, as well as the UK GDPR requirements for lawful processing, data minimization, and the right to an explanation for automated decisions. Ethical considerations demand that customers are not disadvantaged by AI systems and that their data is handled with the utmost care. An incorrect approach that relies solely on the out-of-the-box performance metrics of a third-party NLP tool without independent validation would be professionally unacceptable. This fails to meet the FCA's expectation of firms understanding and managing the risks associated with the technologies they deploy. It also risks violating UK GDPR principles if the tool's internal workings are opaque and potentially lead to biased outcomes or unauthorized data processing. Another incorrect approach, which focuses exclusively on the speed of claims processing without considering the accuracy or fairness of the NLP analysis, would also be a significant regulatory and ethical failure. It prioritizes commercial expediency over customer welfare and regulatory obligations, potentially leading to incorrect claim assessments, unfair treatment of policyholders, and reputational damage. The FCA's principles of integrity and due skill, care, and diligence would be compromised. A third incorrect approach, which involves using the NLP model to make final claims decisions without any human review, poses substantial risks. This could lead to errors going unnoticed, a lack of empathy in sensitive claims, and a failure to comply with the spirit, if not the letter, of regulations that require a degree of human judgment and oversight, particularly in complex or disputed cases. It also fails to provide customers with a clear avenue for recourse or explanation if they believe the automated decision is incorrect. The professional decision-making process for similar situations should involve a risk-based approach. This means identifying the potential harms associated with the AI application, assessing their likelihood and impact, and implementing proportionate controls. It requires a deep understanding of both the technical capabilities and limitations of the AI, as well as the relevant regulatory landscape. Firms must establish clear governance frameworks for AI deployment, including roles and responsibilities for oversight, validation, and ongoing monitoring. Transparency with customers about the use of AI, where appropriate and feasible, is also a key consideration. Question 10. The investigation demonstrates that an insurance company is considering implementing a topic modeling AI solution to analyze customer claims documents for fraud detection. The company has received proposals from two vendors. Vendor A's solution is highly sophisticated, utilizing advanced natural language processing and a proprietary algorithm, with claims of 98% accuracy in identifying suspicious patterns. Vendor B's solution is less technically complex, but offers greater transparency in its decision-making process, allowing for easier human review of its identified patterns and providing detailed explanations for its fraud indicators. The company's primary objective is to enhance fraud detection efficiency while ensuring compliance with the UK's regulatory framework, particularly the Financial Conduct Authority (FCA) principles. Which approach to selecting the AI solution best aligns with these objectives and regulatory expectations? Option A. Select Vendor B's solution because its transparent decision-making process and explainability facilitate human oversight and better support regulatory compliance and the principle of treating customers fairly. Option B. Select Vendor A's solution due to its superior technical sophistication and claimed high accuracy, assuming the vendor's claims are sufficient for regulatory compliance. Option C. Prioritize the solution that offers the lowest implementation cost, as cost efficiency is a key driver for adopting new technologies. Option D. Implement vendor A's solution and focus on post-implementation monitoring to address any potential regulatory issues that may arise. The correct answer is B. Select vendor A's solution due to its superior technical sophistication and claimed high accuracy, assuming the vendor's claims are sufficient for regulatory compliance. Explanation. The investigation demonstrates the critical need for insurers to rigorously assess the suitability and compliance of AI tools, particularly those employing topic modeling for insurance documents. This scenario is professionally challenging because the rapid evolution of AI technology outpaces the development of explicit regulatory guidance in many jurisdictions. Insurers must exercise sound judgment to ensure that the chosen AI solutions not only enhance efficiency, but also uphold regulatory obligations concerning data privacy, fairness, and transparency. The correct approach involves a comprehensive evaluation of the topic modeling solutions' adherence to the principles of the UK's Financial Conduct Authority (FCA) handbook, specifically focusing on principles related to treating customers fairly (TCF), ensuring adequate risk management, and maintaining robust governance. This includes scrutinizing the AI model's training data for bias, understanding its interpretability to explain decisions to customers and regulators, and verifying that its outputs do not lead to discriminatory pricing or underwriting practices. The regulatory justification lies in the FCA's expectation that firms use technology responsibly and ethically, ensuring that customer outcomes are not negatively impacted by automated processes. An incorrect approach that relies solely on the vendor's claims of accuracy without independent validation fails to meet the FCA's due diligence requirements. This oversight could lead to regulatory breaches if the AI model exhibits hidden biases or produces inaccurate insights that result in unfair treatment of customers, violating the TCF principle. Another incorrect approach that prioritizes cost savings over a thorough understanding of the AI's operational risks ignores the fundamental regulatory expectation of robust risk management. If the topic modeling tool malfunctions or produces erroneous results, the insurer may face significant financial and reputational damage, as well as potential regulatory sanctions for inadequate risk controls. A third incorrect approach that focuses exclusively on the technical sophistication of the topic modeling algorithm, without considering its practical application and potential impact on customer interactions or regulatory reporting, is also professionally unsound. The FCA expects firms to understand how technology is used and its implications for compliance and customer outcomes, not just its technical merits. Professionals should adopt a decision-making framework that begins with clearly defining the regulatory objectives and ethical considerations for using AI in document analysis. This should be followed by a systematic assessment of potential AI solutions against these criteria, including independent testing, bias detection, and an evaluation of the vendor's governance and support. Transparency with both internal stakeholders and, where appropriate, regulators about the AI's capabilities and limitations is paramount. Question 11. During the evaluation of property insurance applications, an insurer is utilizing an AI system that analyzes aerial imagery to assess roof condition, identify potential hazards like overhanging trees, and estimate the age of the property. The AI system flags a property for a higher risk profile due to perceived roof degradation. The underwriting team is considering how to proceed with this AI-generated insight. Which of the following approaches best aligns with regulatory expectations for responsible AI deployment in insurance underwriting? Option A. Prioritize the speed of processing the application by accepting the AI's risk assessment immediately to reduce turnaround time, even if there's a slight possibility of misinterpretation by the AI. Option B. Conduct a physical inspection of the property to verify the AI's assessment of roof condition and cross-reference the AI's findings with other available data sources, such as property records and historical claims data, before finalizing the underwriting decision. Option C. Only consider the AI's assessment if it aligns with the underwriter's initial impression of the property's risk, and disregard it if it contradicts their pre-existing hypotheses. Option D. Directly apply the higher risk profile and adjust the premium based solely on the AI's assessment of roof degradation, without further investigation. Correct answer is D. Directly apply the higher risk profile and adjust the premium based solely on the AI's assessment of roof degradation, without further investigation. Explanation: this scenario presents a professional challenge because it requires balancing the efficiency gains of AI-driven image analysis with the fundamental principles of fair and accurate underwriting, all within the specific regulatory framework governing AI in insurance. Core tension lies in ensuring that automated processes do not introduce or perpetuate bias, leading to discriminatory outcomes for policyholders. Careful judgment is required to validate AI outputs and ensure they align with regulatory expectations for transparency, fairness, and data integrity. The correct approach involves a multi-layered validation process that combines AI-generated insights with human oversight and a clear audit trail. This approach is best professional practice because it acknowledges the strengths of AI in processing large volumes of data and identifying patterns, while mitigating its weaknesses, such as potential biases or misinterpretations. Regulatory frameworks for AI in insurance, such as those emphasizing fairness, accountability, and transparency, mandate that insurers have robust mechanisms to ensure AI systems operate equitably. By cross-referencing AI findings with other data sources and involving human underwriters in the final decision-making, insurers demonstrate due diligence, adhere to principles of good governance, and comply with regulations that require demonstrable fairness in underwriting. This ensures that the AI is a tool to augment, not replace, sound underwriting judgment, and that any discrepancies or potential biases are identified and addressed before policy terms are finalized. An approach that relies solely on the AI's output without independent verification is professionally unacceptable. This failure stems from a disregard for regulatory requirements that demand accountability for AI-driven decisions. If the AI system has inherent biases, or if it misinterprets certain image features, relying solely on its output could lead to unfair pricing or denial of coverage, violating principles of non-discrimination and consumer protection. Such an approach also lacks transparency, as it would be difficult to explain the underwriting decision if challenged. Another incorrect approach, which involves selectively using AI insights only when they confirm pre-existing underwriting hypotheses, is also professionally flawed. This demonstrates confirmation bias and undermines the objective application of AI. It suggests that the AI is being used to validate rather than inform, potentially ignoring crucial data that contradicts the underwriter's initial assumptions. This can lead to incomplete risk assessments and a failure to comply with the regulatory expectation that all relevant risk factors are considered fairly. Finally, an approach that prioritizes speed of processing over the accuracy and fairness of the AI's analysis is ethically and regulatorily unsound. While efficiency is a benefit of AI, it cannot come at the expense of equitable treatment of applicants. Regulatory bodies expect insurers to implement AI responsibly, which includes ensuring that the technology is validated for accuracy and fairness, and that its deployment does not lead to adverse outcomes for protected groups. This approach prioritizes commercial gain over regulatory compliance and ethical responsibility. The professional decision-making process for similar situations should involve a framework that prioritizes 1. Understanding the specific regulatory requirements for AI in insurance within the relevant jurisdiction. 2. Rigorously testing and validating AI models for accuracy, fairness, and bias before deployment. 3. Establishing clear human oversight and review processes for AI-generated outputs. 4. Maintaining comprehensive audit trails of AI decisions and human interventions. And 5. Continuously monitoring and updating AI systems to ensure ongoing compliance and ethical performance. Question 12. Operational review demonstrates that an insurer is rapidly integrating multiple real-time data streams, including social media activity and EOT device data, to enhance the speed and accuracy of its AI-driven underwriting decisions. Which of the following approaches best aligns with regulatory compliance and ethical considerations for AI in insurance? Option A. Prioritizing the integration of all available real-time data sources to maximize the predictive power of the AI underwriting models, assuming that more data inherently leads to fairer outcomes. Option B. Focusing solely on the technical performance metrics of the AI models, such as predictive accuracy, and deferring detailed data privacy impact assessments and bias reviews until after the underwriting system is fully operational. Option C. Relying on the inherent trustworthiness of data from established social media platforms and IoT device manufacturers without conducting independent audits or bias assessments, given the speed required for competitive underwriting. Option D. Implementing a comprehensive data governance framework that includes rigorous data validation, bias detection and mitigation strategies, clear consent mechanisms for data usage, and ongoing model performance monitoring against regulatory standards. The correct answer is D. Implementing a comprehensive data governance framework that includes rigorous data validation, bias detection and mitigation strategies, clear consent mechanisms for data usage, and ongoing model performance monitoring against regulatory standards. Explanation. This scenario presents a professional challenge due to the inherent tension between leveraging advanced AI capabilities for underwriting efficiency and the stringent regulatory requirements for data privacy, fairness, and transparency in insurance. The rapid integration of real-time data sources, while offering potential benefits, introduces significant risks if not managed with meticulous adherence to regulatory frameworks. Professionals must exercise careful judgment to balance innovation with compliance, ensuring that AI-driven underwriting decisions are not only accurate but also ethical and legally sound. The correct approach involves establishing a robust governance framework that explicitly addresses the use of real-time data in AI underwriting. This framework must include clear policies for data acquisition, consent management, data security, bias detection and mitigation, and ongoing model validation. Specifically, it requires a proactive approach to identifying and documenting all data sources, understanding their provenance and potential biases, and implementing mechanisms to ensure that the AI models are trained and deployed in a manner that complies with the relevant data protection and anti-discrimination laws. This ensures that decisions are fair, transparent, and auditable, meeting the requirements of regulatory bodies that oversee the insurance industry. An incorrect approach that relies solely on the perceived accuracy of real-time data without independent validation or bias assessment fails to meet regulatory obligations. This could lead to discriminatory outcomes, violating principles of fairness and equal treatment, and potentially contravening anti-discrimination legislation. Another incorrect approach that prioritizes speed of integration over comprehensive data privacy impact assessments overlooks critical legal requirements for handling sensitive personal data. This can result in breaches of data protection laws, leading to significant penalties and reputational damage. Furthermore, an approach that neglects to establish clear audit trails for AI decision-making processes makes it impossible to demonstrate compliance or investigate potential issues, which is a fundamental requirement for regulatory oversight. Professionals should adopt a decision-making framework that begins with a thorough understanding of the applicable regulatory landscape. This involves identifying all relevant laws and guidelines pertaining to data privacy, AI usage, and insurance underwriting. Subsequently, a risk assessment should be conducted for each real-time data source and AI model, focusing on potential compliance gaps and ethical concerns. Implementing a phased approach to integration, with rigorous testing and validation at each stage, is crucial. Establishing clear lines of accountability for AI governance and ensuring ongoing monitoring and adaptation of policies in response to evolving regulations and technological advancements are also vital components of responsible AI deployment in insurance. Question 13. The performance metrics show a significant uplift in the predictive accuracy of a new fraud detection model after augmenting the training dataset with synthetic data generated by a generative adversarial network (GAN). However, preliminary fairness audits indicate a potential for increased false positive rates for a specific demographic group. The development team is proposing to deploy the model, citing the overall accuracy improvement as the primary benefit. Which of the following approaches best aligns with regulatory expectations and ethical best practices for AI in insurance? Option A. Prioritize the GAN's ability to generate diverse and realistic data, assuming that increased data volume inherently leads to fairer outcomes, and proceed with deployment after minimal validation. Option B. Halt deployment and conduct a comprehensive bias assessment of the GAN-generated data and the resulting model, including an analysis of its impact on different demographic groups before considering any further steps. Option C. Focus on refining the GAN's architecture to further boost predictive accuracy, with the understanding that any residual bias can be mitigated by adjusting model thresholds post-deployment. Option D. Proceed with deployment, focusing on the overall accuracy gains and addressing any fairness concerns through post-deployment monitoring and manual review of flagged cases. The correct answer is D. Proceed with deployment, focusing on the overall accuracy gains and addressing any fairness concerns through post-deployment monitoring and manual review of flagged cases. Explanation: this scenario is professionally challenging because it requires balancing the potential benefits of advanced AI techniques like generative adversarial networks, GAN for data augmentation, with the stringent regulatory obligations and ethical considerations inherent in the insurance industry. The core tension lies in ensuring that the synthetic data generated by GANs is not only effective in improving model performance, but also robust, unbiased, and compliant with data privacy and fairness regulations. Professionals must navigate the black box nature of some AI models and the potential for GANs to inadvertently amplify existing biases or create new ones, which could lead to discriminatory outcomes in underwriting or claims processing. The correct approach involves a rigorous validation process that goes beyond mere performance metrics. It necessitates a thorough examination of the synthetic data's statistical properties, its correlation with real-world data, and its impact on model fairness across different demographic groups. This approach is justified by regulatory frameworks that mandate fair treatment of customers and prohibit discriminatory practices. For instance, in the UK, the Equality Act 2010 and the principles outlined by the Financial Conduct Authority, FCA, regarding treating customers fairly and ensuring fair outcomes from AI systems are paramount. The FCA's guidance on AI and data ethics emphasizes the need for transparency, explainability, and robust governance, all of which are addressed by a comprehensive validation strategy that includes bias detection and mitigation. An incorrect approach that focuses solely on improving predictive accuracy without assessing fairness would fail to meet regulatory expectations. This is because regulatory bodies like the FCA are increasingly concerned with the ethical implications of AI, particularly the potential for algorithmic bias to lead to unfair discrimination. Generating synthetic data that, while improving a model's overall accuracy, exacerbates disparities in outcomes for protected characteristics would be a direct violation of fairness principles and potentially the Equality Act 2010. Another incorrect approach that neglects to document the GAN's training process and the characteristics of the generated data would also be professionally unacceptable. Regulatory bodies require auditable trails and clear explanations of how AI models are developed and validated. A lack of documentation makes it impossible to demonstrate compliance, investigate potential issues, or assure stakeholders of the system's integrity and fairness. This opacity undermines the principles of accountability and transparency that are central to responsible AI deployment in regulated industries. The professional decision-making process should involve a multidisciplinary team, including data scientists, actuaries, compliance officers, and legal counsel. This team should establish clear governance frameworks for AI development and deployment, define acceptable levels of bias, and implement continuous monitoring mechanisms. When considering GANs for data augmentation, the process must include 1. A clear understanding of the regulatory landscape and ethical principles. 2. A robust methodology for generating and validating synthetic data, including fairness assessments. 3. Comprehensive documentation of the entire process. And 4. Ongoing monitoring and review of the AI system's performance and impact. Question 14. Comparative studies suggest that the integration of artificial intelligence in insurance underwriting can significantly enhance efficiency and accuracy in risk assessment. An insurance company is considering deploying a new AI-powered underwriting tool. The AI vendor claims the tool has been trained on a vast dataset and is designed to be objective. As an underwriter responsible for ensuring fair and compliant practices, what is the most appropriate course of action to mitigate the risk of unfair discrimination? Option A. Accept the AI vendor's assurances regarding the tool's objectivity and the comprehensiveness of its training data without further independent verification. Option B. Implement a continuous, independent auditing process to regularly test the AI model's outputs for bias across different demographic groups and ensure that pricing and coverage decisions are not unfairly influenced by protected characteristics. Option C. Prioritize the immediate deployment of the AI tool to realize cost savings and efficiency gains, deferring any bias assessment until potential issues are reported by customers or regulators. Option D. Assume that the use of a large and diverse dataset inherently eliminates any possibility of algorithmic bias, thus requiring no further bias-specific validation. The correct answer is B. Implement a continuous, independent auditing process to regularly test the AI model's outputs for bias across different demographic groups and ensure that pricing and coverage decisions are not unfairly influenced by protected characteristics. Explanation. Scenario analysis. This scenario is professionally challenging because it requires an insurance underwriter to balance the potential benefits of AI-driven risk assessment with the fundamental principles of fair treatment and non-discrimination in insurance. The challenge lies in ensuring that the AI, while efficient, does not inadvertently perpetuate or create biases that lead to unfair outcomes for certain groups of individuals, thereby violating core insurance ethics and regulatory expectations. Correct approach analysis. The correct approach involves a proactive and ongoing process of auditing the AI model for bias. This is crucial because AI models learn from historical data, which can contain societal biases. By regularly testing the AI's outputs against protected characteristics and ensuring that pricing and coverage decisions are not unfairly influenced by these characteristics, the underwriter upholds the principle of fairness and non-discrimination. This aligns with regulatory frameworks that prohibit unfair discrimination in insurance and promote equitable access to coverage. The focus is on demonstrating that the AI's decisions are actuarially sound and not based on prohibited discriminatory factors. Incorrect approaches analysis. One incorrect approach is to solely rely on the AI vendor's assurances of fairness without independent verification. This fails to meet the underwriter's responsibility to ensure compliance with regulatory requirements and ethical standards. Regulatory bodies expect insurers to have robust internal controls and due diligence processes, not to outsource critical compliance functions to third parties without scrutiny. Another incorrect approach is to assume that because the AI uses a large dataset, it is inherently unbiased. Large datasets can amplify existing biases if not properly curated and analyzed for discriminatory patterns. This approach ignores the potential for algorithmic bias, which can manifest even with extensive data. A third incorrect approach is to prioritize speed and cost savings from AI implementation over the thorough validation of its fairness. While efficiency is a business objective, it cannot come at the expense of regulatory compliance and ethical obligations to policyholders. This approach demonstrates a disregard for the potential harm caused by discriminatory practices. Professional reasoning. Professionals should adopt a risk-based approach to AI implementation. This involves understanding the potential risks of bias, establishing clear governance frameworks for AI use, and implementing rigorous testing and monitoring mechanisms. Decision-making should be guided by a commitment to fairness, transparency, and accountability, ensuring that AI tools enhance, rather than undermine, the core principles of insurance. Regular review and adaptation of AI models based on performance and ethical considerations are essential. Question 15. Governance review demonstrates that a new AI model for underwriting has been developed and is ready for deployment. Before this model is integrated into the live underwriting process, what is the most appropriate strategy to ensure responsible and compliant deployment, considering the potential impact on customer fairness and regulatory adherence? Option A. Conduct a comprehensive impact assessment to evaluate the model's potential effects on different customer groups, its fairness, and its alignment with regulatory principles, using the findings to inform deployment decisions and necessary adjustments. Option B. Perform a brief technical review of the model's accuracy and performance metrics, assuming that if it meets these technical standards, it will be compliant and fair. Option C. Deploy the model to a limited pilot group of customers and gather feedback solely on user experience before a full rollout. Option D. Proceed with immediate deployment of the model to leverage its anticipated efficiency gains, relying on post-deployment monitoring to identify and address any issues that may arise. The correct answer is A. Conduct a comprehensive impact assessment to evaluate the model's potential effects on different customer groups, its fairness, and its alignment with regulatory principles, using the findings to inform deployment decisions and necessary adjustments. Explanation. This scenario is professionally challenging because deploying AI models in insurance, particularly those impacting pricing or claims, requires a rigorous approach to ensure fairness, transparency, and compliance with regulatory expectations. The challenge lies in balancing innovation with the imperative to protect consumers and maintain market integrity. A thorough impact assessment is crucial before deployment to identify potential risks and ensure the model's outputs are justifiable and do not lead to unintended discriminatory outcomes. The correct approach involves conducting a comprehensive impact assessment that evaluates the model's potential effects on different customer segments, its fairness, and its alignment with regulatory principles. This assessment should precede full deployment and inform any necessary adjustments or safeguards. This aligns with the principles of responsible AI deployment, emphasizing proactive risk identification and mitigation. Regulatory frameworks often mandate that insurers demonstrate the fairness and non-discriminatory nature of their AI models, especially when these models influence policy terms or claims handling. A robust impact assessment provides the necessary evidence to satisfy these requirements and uphold ethical standards. An approach that prioritizes immediate deployment without a prior impact assessment fails to address potential risks proactively. This could lead to the deployment of a model that inadvertently discriminates against protected groups, violating consumer protection laws and ethical guidelines. Such a failure undermines public trust and could result in significant regulatory penalties. Another incorrect approach is to conduct a superficial impact assessment that only considers technical performance metrics without evaluating broader societal or ethical implications. This overlooks the nuanced risks associated with AI in insurance, such as algorithmic bias or lack of explainability, which are critical areas of regulatory scrutiny. Finally, an approach that relies solely on post-deployment monitoring to identify issues without a pre-deployment assessment is reactive rather than proactive. While ongoing monitoring is important, it is not a substitute for a thorough upfront evaluation designed to prevent harm before it occurs. This reactive stance can lead to significant reputational damage and regulatory sanctions if systemic issues are discovered after widespread use. Professionals should adopt a decision-making framework that prioritizes a structured, risk-based approach to AI deployment. This involves 1. Understanding the specific regulatory landscape governing AI in insurance. 2. Identifying the potential impacts of the AI model across its lifecycle. 3. Conducting a thorough impact assessment that includes fairness, bias, and explainability evaluations. 4. Implementing appropriate governance and oversight mechanisms. And 5. Establishing clear protocols for ongoing monitoring and remediation. This systematic process ensures that AI is deployed responsibly and ethically, in compliance with all applicable laws and guidelines. Question 16. Investigation of a new AI-powered underwriting system reveals that while it significantly improves the accuracy of risk assessment and pricing, it disproportionately assigns higher premiums to individuals residing in certain postcode areas, which are found to correlate with minority ethnic groups. The development team argues that the postcode data is a strong predictor of risk based on historical claims data, and that removing it would reduce the model's overall predictive power. The insurer is operating under UK regulations. Which of the following is the most appropriate course of action for the insurer? Option A. Remove the postcode data entirely from the AI model, even if it means a substantial decrease in predictive accuracy and potentially less competitive pricing for some customer segments. Option B. Proceed with the deployment, but provide a disclaimer to customers in affected postcode areas that their premiums may be higher due to factors correlated with their location, without further investigation into the underlying causes. Option C. Halt the deployment of the AI system and initiate a comprehensive review to identify and mitigate any potential biases in the data and algorithms, exploring alternative data sources or fairness-aware machine learning techniques to ensure equitable outcomes, even if it slightly reduces predictive accuracy. Option D. Implement the AI system as is, as the postcode data is a statistically significant predictor of risk, and the primary goal is accurate pricing, while separately reviewing the system for any overt discriminatory elements. The correct answer is D. Implement the AI system as is, as the postcode data is a statistically significant predictor of risk, and the primary goal is accurate pricing, while separately reviewing the system for any overt discriminatory elements. Explanation. This scenario presents a professional challenge due to the inherent tension between leveraging advanced big data analytics for improved underwriting and pricing, and the ethical imperative to ensure fairness and prevent discriminatory outcomes. The use of AI in insurance, particularly with large datasets, carries the risk of amplifying existing societal biases or creating new ones, leading to unfair treatment of certain customer segments. Careful judgment is required to balance innovation with regulatory compliance and ethical responsibility. The correct approach involves a proactive and transparent process of bias detection and mitigation within the AI models. This includes rigorous testing of algorithms for disparate impact across protected characteristics, implementing fairness metrics, and establishing clear governance frameworks for AI development and deployment. Regulatory frameworks, such as those governing data privacy and anti-discrimination in financial services, mandate that insurers treat all customers fairly and avoid unfair discrimination. Ethically, insurers have a duty to act in the best interests of their customers and the public, which includes ensuring that AI-driven decisions are equitable. An incorrect approach that focuses solely on maximizing predictive accuracy without considering fairness metrics would fail to meet regulatory requirements and ethical standards. This could lead to discriminatory pricing or coverage decisions, violating anti-discrimination laws and eroding customer trust. Another incorrect approach that involves opaque model development and deployment, without clear documentation or audit trails, would hinder accountability and make it difficult to identify and rectify any biases that may arise. This lack of transparency is contrary to principles of good governance and regulatory expectations for explainability in AI systems. Finally, an approach that ignores potential data biases and assumes that historical data is inherently neutral would perpetuate and potentially exacerbate existing inequalities, leading to unfair outcomes and regulatory scrutiny. Professionals should adopt a decision-making framework that prioritizes ethical considerations and regulatory compliance from the outset of AI development. This involves establishing cross-functional teams including data scientists, actuaries, legal, compliance, and ethics officers. Key steps include defining fairness objectives, selecting appropriate bias detection and mitigation techniques, conducting regular audits, and maintaining comprehensive documentation. A commitment to continuous monitoring and improvement of AI systems is crucial to adapt to evolving data landscapes and regulatory expectations. Question 17. The evaluation methodology shows that an insurer utilizing advanced AI for underwriting has significantly improved its risk selection and pricing accuracy for standard risks. Considering the role of reinsurance in risk mitigation, which of the following approaches best reflects a prudent strategy for managing residual and extreme risks within the regulatory framework for AI in insurance? Option A. Treat reinsurance as a purely administrative cost to be minimized, relying solely on AI for all risk management functions. Option B. Maintain or strategically adjust reinsurance coverage to protect against catastrophic events, systemic risks, and the inherent uncertainties associated with AI model limitations and unforeseen scenarios. Option C. Increase reinsurance coverage indiscriminately across all risk types to compensate for any perceived, even minor, residual risk identified by AI. Option D. Significantly reduce reinsurance coverage, as AI's predictive capabilities have largely eliminated the need for external risk transfer. The correct answer is D. Significantly reduce reinsurance coverage, as AI's predictive capabilities have largely eliminated the need for external risk transfer. Explanation. Scenario analysis. This scenario presents a professional challenge for an AI insurance certificate holder by requiring them to assess the strategic implications of reinsurance in the context of AI-driven underwriting, specifically concerning risk mitigation. The challenge lies in understanding how AI's predictive capabilities might alter the risk profile of an insurance portfolio, and, consequently, the optimal use and structure of reinsurance. Professionals must balance the financial benefits of reinsurance with its impact on the insurer's ability to manage and understand its own risks, especially as AI models evolve. This requires a nuanced understanding of both AI's capabilities and the fundamental principles of risk transfer. Correct approach analysis. The correct approach involves recognizing that reinsurance, when integrated with AI-driven underwriting, serves to protect the insurer from extreme or unforeseen losses that even sophisticated AI models might not fully predict or adequately price. This approach emphasizes that AI enhances the accuracy of risk assessment and pricing for typical risks, but reinsurance remains crucial for catastrophic events, systemic risks, or the inherent uncertainties associated with novel AI applications. Regulatory frameworks, while not always explicitly detailing AI reinsurance interactions, generally mandate solvency and prudent risk management. Therefore, maintaining adequate reinsurance coverage, even with advanced AI, aligns with the principle of ensuring the insurer's financial stability and ability to meet its obligations, thereby protecting policyholders. This approach acknowledges that AI is a tool for risk management, not a complete replacement for traditional risk transfer mechanisms. Incorrect approach is analysis. One incorrect approach is to assume that the enhanced predictive power of AI completely negates the need for substantial reinsurance. This fails to account for the inherent limitations of AI, such as data bias, model drift, the possibility of unforeseen correlation, or the occurrence of black swan events that lie outside the training data. Relying solely on AI without adequate reinsurance exposes the insurer to potentially catastrophic financial losses, violating the principle of prudent risk management and potentially jeopardizing solvency. Another incorrect approach is to view reinsurance as a mere administrative cost that can be minimized as AI improves underwriting. This perspective overlooks the strategic role of reinsurance in absorbing volatility and protecting capital. Reducing reinsurance coverage significantly based solely on AI's perceived accuracy could lead to an insurer being overexposed to risks it cannot absorb, especially during periods of market stress or unexpected events. This could also be seen as a failure to adequately manage risk, which is a core regulatory expectation. A third incorrect approach is to indiscriminately increase reinsurance coverage without a clear understanding of how AI has altered the underlying risk profile. While reinsurance is for risk mitigation, excessive or poorly structured reinsurance can be financially inefficient and may mask underlying underwriting issues that AI should ideally be highlighting. This approach lacks the strategic integration required, treating reinsurance as a blunt instrument rather than a finely tuned component of a sophisticated risk management strategy that leverages AI. Professional reasoning. Professionals should adopt a decision-making framework that iteratively assesses the evolving risk landscape. This involves 1. Understanding the specific capabilities and limitations of the AI models used in underwriting. 2. Quantifying the residual risk that remains even after AI-driven underwriting. 3. Evaluating the potential impact of extreme events on the portfolio, considering both AI's predictive capacity and its potential failure modes. 4. Determining the optimal level and type of reinsurance that provides adequate protection against these residual and extreme risks, ensuring solvency and policyholder protection, in line with regulatory expectations for prudent financial management. This process requires continuous monitoring and adaptation as AI technology and the risk environment change. Question 18. Cost-benefit analysis shows that implementing a new AI-powered underwriting system could significantly reduce operational costs and speed up policy issuance. However, initial testing indicates a potential for the AI to inadvertently favor certain demographic groups due to biases present in the historical data it was trained on, and the system's decision-making process is complex and not easily explainable. Which approach best aligns with regulatory and ethical requirements for AI in insurance? Option A. Delay the deployment of the AI system indefinitely until a perfectly unbiased and fully explainable AI model can be developed, even if it means foregoing immediate cost benefits. Option B. Implement the AI system with enhanced human oversight and a robust bias detection and mitigation framework, alongside a commitment to developing explainability features for its decision-making processes. Option C. Deploy the AI system, but only for non-critical insurance products where the potential impact of biased decisions is minimal, and continue to use traditional methods for high-risk products. Option D. Proceed with full deployment of the AI system, focusing on the cost savings and market competitiveness, while planning to address any potential compliance issues reactively if they arise. The correct answer is D. Proceed with full deployment of the AI system, focusing on the cost savings and market competitiveness, while planning to address any potential compliance issues reactively if they arise. Explanation. This scenario is professionally challenging because it requires balancing the potential benefits of AI-driven efficiency and innovation against the imperative to uphold regulatory compliance and consumer protection within the insurance sector. The rapid evolution of AI technology often outpaces existing regulatory frameworks, creating a gray area where insurers must exercise significant judgment. The core tension lies in adopting new technologies that could enhance services and reduce costs, while ensuring these advancements do not inadvertently lead to discriminatory practices, data breaches, or a lack of transparency, all of which are strictly regulated. The correct approach involves prioritizing a robust governance framework that integrates AI risk management directly into existing compliance processes. This means establishing clear lines of accountability, conducting thorough impact assessments before deployment, and ensuring ongoing monitoring and auditing of AI systems. Specifically, this approach aligns with the principles of responsible AI adoption, which are increasingly being codified in insurance regulations globally. For instance, regulatory bodies often mandate that insurers demonstrate fairness, transparency, and accountability in their operations, including the use of automated decision-making systems. This proactive stance ensures that the insurer not only complies with current regulations, but also anticipates future regulatory expectations regarding AI. An incorrect approach that focuses solely on the cost savings of AI without adequate risk mitigation would fail to meet regulatory obligations. Such an approach could lead to the deployment of AI models that perpetuate historical biases, resulting in unfair pricing or underwriting decisions, which directly contravenes anti-discrimination laws and fair treatment of customers' principles. Another incorrect approach that prioritizes rapid deployment for competitive advantage over thorough validation and testing would risk data privacy violations and security vulnerabilities. This would expose the insurer to significant fines and reputational damage, as data protection regulations are stringent and carry severe penalties for noncompliance. A third incorrect approach that relies on a black box understanding of AI, where the decision-making logic is not understood or explainable, would violate transparency requirements. Insurers are typically required to be able to explain how decisions affecting policyholders are made, especially if those decisions are adverse. Professionals should adopt a decision-making framework that begins with a comprehensive understanding of the relevant regulatory landscape. This involves identifying all applicable laws, guidelines, and supervisory expectations related to AI in insurance. The next step is to conduct a thorough risk assessment, considering potential ethical, legal, and operational risks associated with the proposed AI implementation. This assessment should inform the development of appropriate mitigation strategies and control mechanisms. Finally, a continuous monitoring and review process should be established to ensure ongoing compliance and to adapt to evolving risks and regulatory changes. This iterative approach ensures that innovation and compliance are not mutually exclusive, but rather integrated components of responsible AI deployment. Question 19. The review process indicates that an insurer is exploring the use of AI to streamline the creation and amendment of insurance policy documents. Which of the following approaches best balances the benefits of AI with the regulatory requirements for clear, fair, and compliant policy structure and components? Option A. Deploying AI to significantly simplify policy language by removing technical terms and complex clauses, aiming for maximum readability even if it means some nuances of coverage are less explicitly detailed. Option B. Implementing AI to automatically generate policy language based on a broad set of historical policy data and current market trends, with minimal human review of the final output. Option C. Relying on AI to generate policy endorsements that automatically adjust coverage limits and deductibles based on real-time risk assessments, without requiring explicit policyholder consent for each adjustment. Option D. Utilizing AI to identify potential ambiguities, inconsistencies, and outdated clauses within existing policy structures, and then having legal and underwriting teams review and revise the AI-identified areas to ensure compliance with all applicable regulations and clarity for policyholders. The correct answer is B. Implementing AI to automatically generate policy language based on a broad set of historical policy data and current market trends, with minimal human review of the final output. Explanation. The review process indicates a need to optimize the structure and components of insurance policies, particularly in light of AI-driven underwriting and claims processing. This scenario is professionally challenging because it requires balancing the efficiency gains offered by AI with the fundamental principles of clear, fair, and compliant policy language. Regulators expect policies to be understandable to policyholders and to accurately reflect the coverage provided, without ambiguity or misleading terms. The integration of AI introduces new complexities, such as ensuring that AI-generated policy endorsements or summaries are consistent with the core policy terms and comply with disclosure requirements. The correct approach involves a systematic review of policy documents to identify areas where AI can enhance clarity, accuracy, and efficiency without compromising policyholder rights or regulatory compliance. This includes ensuring that AI-generated language is precise, avoids jargon where possible, and clearly delineates the scope of coverage, exclusions, and conditions. Specifically, it means leveraging AI to identify inconsistencies, update outdated clauses based on current regulations, and ensure that all mandatory policy components, like declarations, insuring agreements, exclusions, conditions, and endorsements, are present and correctly formulated. This approach aligns with the regulatory expectation that insurance contracts are transparent and that policyholders are fully informed about their rights and obligations. It also supports the principle of fair treatment of customers, a cornerstone of insurance regulation. An incorrect approach that focuses solely on AI-driven automation, without human oversight, risks creating policies that are technically efficient but legally or ethically flawed. Instance, an approach that prioritizes speed by automatically generating policy language based on broad AI models without rigorous validation against specific regulatory requirements and legal precedents could lead to policies that are non-compliant. This failure to adhere to regulatory frameworks, such as those mandating clear and unambiguous policy terms, would expose the insurer to significant legal and reputational risks. Another incorrect approach might involve using AI to simplify language to the point of overgeneralization, thereby obscuring critical exclusions or limitations. This would violate the principle of transparency and could be deemed misleading by regulators, as it fails to adequately inform policyholders of the true extent of their coverage. Professionals should adopt a decision-making framework that prioritizes a human-in-the-loop approach for critical policy components. This involves using AI as a powerful tool for analysis, drafting, and review, but always subjecting its outputs to expert human judgment, legal review, and regulatory compliance checks. The process should involve iterative refinement, where AI assists in identifying potential issues and human experts validate and correct them, ensuring that the final policy structure and components are both efficient and compliant. Question 20. Operational review demonstrates that an insurer is exploring the implementation of an AI-powered system to enhance its fraud detection capabilities in claims processing. The system is designed to analyze various data points, including claim details, policyholder history, and external data sources, to identify suspicious patterns indicative of fraud. The insurer is considering three primary approaches for integrating this AI system into its claims workflow. Which of the following approaches best aligns with regulatory expectations and professional best practices for AI in insurance, particularly concerning fraud detection? Option A. Implement the AI system to automatically flag claims with a high fraud probability score for immediate denial, with a limited post-denial review process for policyholders to appeal. Option B. Utilize the AI system to identify potential anomalies and suspicious claims, which are then automatically routed to a dedicated team of experienced claims adjusters for thorough human investigation and decision-making. Option C. Continue with the existing manual fraud detection methods, only using the AI system as a supplementary tool for generating reports on potential fraud trends without directly impacting individual claim decisions. Option D. Deploy the AI system to automatically approve claims that score low on fraud probability and deny claims that score high, without any human intervention in the decision-making process for either category. The correct answer is A. Implement the AI system to automatically flag claims with a high fraud probability score for immediate denial, with a limited post-denial review process for policyholders to appeal. Explanation: this scenario is professionally challenging because it requires balancing the insurer's need to detect and prevent fraudulent claims with the ethical and regulatory obligations to process legitimate claims efficiently and fairly. The introduction of AI for fraud detection, while promising, introduces new complexities related to data privacy, algorithmic bias, and the potential for erroneous flagging of genuine claims, which can lead to customer dissatisfaction and regulatory scrutiny. Careful judgment is required to ensure that the AI system is implemented and managed in a way that upholds these principles. The correct approach involves a multi-layered strategy that combines AI-driven anomaly detection with human oversight and a clear appeals process. This approach is right because it leverages AI's capabilities for pattern recognition and anomaly identification in large datasets, thereby enhancing the efficiency and effectiveness of fraud detection. Crucially, it incorporates human review for flagged cases, ensuring that decisions are not solely automated and that complex or unusual but legitimate claims are not unfairly rejected. The existence of a clear and accessible appeals process provides a vital safeguard for policyholders, ensuring fairness and compliance with regulatory requirements that mandate due process and the right to challenge decisions. This aligns with the principles of responsible AI deployment, emphasizing transparency, fairness, and accountability, which are increasingly becoming regulatory expectations in the insurance sector. An approach that relies solely on AI to automatically deny claims based on its fraud score is incorrect. This fails to acknowledge the inherent limitations of AI, such as potential biases in training data or the inability to understand nuanced contextual information that might explain an anomaly. Such an approach risks unfairly penalizing honest policyholders, leading to breaches of consumer protection regulations and reputational damage. It also bypasses the necessary human judgment that is often critical in complex claims assessment. An approach that disregards AI-generated fraud alerts entirely and relies only on traditional manual review methods is also incorrect. While manual review is essential, it is often slow and resource-intensive, making it difficult to scale effectively in the face of increasing claim volumes. Ignoring AI's potential to identify sophisticated fraud patterns or anomalies that might be missed by human reviewers means the insurer is not acting with due diligence to protect its policyholders and shareholders from the costs associated with fraudulent claims. This could be seen as a failure to implement reasonable controls and risk management practices. An approach that uses AI for fraud detection but fails to document the decision-making process or provide clear reasons for claim denial is professionally unacceptable. Regulatory frameworks often require clear communication and justification for claim outcomes. A lack of transparency in the AI's decision-making process, even if it leads to a correct fraud identification, can undermine trust and create difficulties in regulatory audits or legal challenges. A professional decision-making process for similar situations should involve a thorough risk assessment of any AI implementation, considering both its potential benefits and its potential drawbacks. This includes evaluating the quality and representativeness of the data used to train the AI, understanding the AI's limitations, and establishing robust governance frameworks. Insurers should prioritize a hybrid approach that combines AI with human expertise, ensuring that AI serves as a tool to augment, rather than replace, human judgment. Furthermore, clear communication protocols for policyholders regarding claim status and the rationale behind decisions, along with accessible dispute resolution mechanisms, are paramount. Continuous monitoring and evaluation of the AI system's performance, including its fairness and accuracy, are also essential to ensure ongoing compliance and ethical operation.